Good morning. Today is Tuesday, February 28th, the last day of the month of February. And as we are closing in towards the last few hours of this month, overnight on Wall Street, we can see that the market was just struggling. After last Friday massive decline in equity prices, the market is now a little bit jittery on the prospect of this coming March FOMC meeting, where the Federal Reserve is likely to hike interest rates beyond the 25 basis point that we saw in February. So the thing is that over the last 2 weeks, we have seen the U.S. economy, basically the numbers coming out support the idea that the U.S. economy is still pretty hot. And that means the Federal Reserve has not tamed inflation. The idea of disinflation, which the Fed chairman has been talking about since the last FOMC meeting on the 1st of February, now it seems to be no longer in the picture. We are beginning to see a resurgence in prices. Last night we have the release of the durable goods, and it came in hotter than it came in worse than expected. The market was expecting a decline of -4%. It came in -4.5. However, in the capital goods expenditure, excluding aircraft, we see a marked increase in prices from -0.2 for the month of December to 0.8. The market was expecting no growth at all. So the impact was actually quite shocking. But between the two numbers, they cancel out each other, but the market remains actively jittery. Okay. So the market actually went up first on the release of this number, and towards the end of the evening itself, the market actually started to retrace, ending with a very, very marginal gain for all equity index across the board. So we can see that the Dow Jones is basically trading within the band of at the bottom 23,570. Top side is 34,342. So this market needs to break out of this wider band. Previously, the band was even narrower. For more than 2 weeks, the market was trading within a very, very narrow band between which. So now the band has doubled. Okay, but it still remains a consolidation phase. The market top out at 34,712 in January. So we can see the whole entire month of February, the market was either in consolidation or basically been testing the lower end. So we will have to look forward to the month of March, whether the market will be doing better, but I got a sense the market is going to do a lot worse than February. Okay, so do watch out for the month of February leading into April, because I think the next 2 months is going to be pretty exciting. Okay, so over in the S&P 500, we also saw the market pull back from a high of 4,195 and then stabilize at 3,940. The market have actually crossed many times the 4,000 levels. So the 4,000 levels has become a non-event. Now the market now looks at, yeah, although we have a rebound last night, but the market closes on the slightly weaker note towards the end of the evening itself. That lay the stage for either another set of rebound tonight, but basically I think the trend is likely to go lower. Okay. Over the Nasdaq 100, we can see the Nasdaq has also rebounded somewhat in a three-wave decline from a high of 12,881, and it has stabilized at just above 11,900 levels. Also is a corrective move, and we will have to see whether the market has enough strength to actually starting to rebound even higher. But I think the market move right now is not to trade higher, but I think waiting for the FOMC meeting, which will come in the middle of March. So until then, the market is going to be very, very cautious. No one is likely to be gung-ho enough to want to take this market higher, because we know the algo is becoming, all the major algos, whether the slow or the fast algo, are beginning to look at shorting US equities. So be very careful to the downside. Very little upside potential, but you want to protect your downside. Okay. Over in Asia, we see that the Nikkei 225 actually this morning have a rebound, and this of course is based on the idea that the incoming governor of the Bank of Japan is also going to maintain the same ultra loose monetary policy from the previous governor called Kuroda, and the new governor called Ueda will take over the post on April the 8th, and we are beginning to see him talk. Yesterday, he again made a speech, but basically he is maintaining a idea that he is likely to continue with the current policy of maintaining ultra loose monetary policy, and that is actually good for equities in Japan. And so we can see prices have actually rebounded from the low of 27,046. But I think by and large, this rebound is going to be very limited in scope. At the very most, we have a 5-wave rally. Meaning to say, technically speaking, if we get a 5-wave rally, beyond 27,821, then that will complete the five-way structure, and the top side here will be 28,200 thereabout. But I think over the longer term, this market is bound to come off because they are on the wrong side of history, because the rest of the central banks are aggressively hiking rates while they are still maintaining negative interest rates environment. So there's going to be a lot of outflow of capital from Japan, and it's going to be a very hard act to maintain, because the rest of the world is going in the opposite direction. So eventually the Bank of Japan will have to capitulate, and we will have to see what happened then. So I think this market is seriously overvalued, and do watch out for any kind of massive move in this market here. Over in the Shanghai Composite Index, we can see that Shanghai Composite Index remains in consolidation. Upside is 3,310. Market has tested 4 rounds all in a row. None of them has managed to go beyond 3,310. So you can actually imagine there's going to be a lot of stops accumulated above 3,310, because after 4 rounds of testing without breaking it, then of course people will be like looking to sell this market, right? So there's going to be a lot of buy stop over here. That means the market is vulnerable for a sudden surge. Okay, so on the downside, the market is consolidated at the bottom here at 3,226 level. Okay, so although there was a minor breach here, but the market managed to bounce back up again. So we can see until the market decided to go either way, to break above 3,310 or to trade below 3,226, the market will be range bound for the time being. Okay, over in Hang Seng, we can see that the Hang Seng continues to trade lower, although we have a bit of a rebound in the early morning session. But for the month of February, it is basically one-way street. It has been coming down since the beginning of February, and it looks like it was closed February on a weak note, and we will have to take a look what March will bring to the Hang Seng market. Okay. Over in the currency market, we can see that the dollar actually retraces somewhat yesterday. That allows the other major currencies to rebound. Euro versus the dollar have a bottom of 105.33, bounce up higher, but it's also quite limited because this bounce is not going to be sustainable at 106.20. At the most, we have another rally attempt to consider this as a three-wave bounce, but by and large, I still think that the currency would have to come back down because the dollar strength is so obvious. Okay, so because if we expect the Federal Reserve to continue to hike rates, then of course that will be beneficial to the dollar, and that means dollar higher, and all the other currency will have to trade lower on a relative basis. Over in sterling, yesterday we have a major surge in sterling. I was originally short the sterling, but I decided to buy back to close my position with a minor profit, because this surge here is actually relatively large when you compare that to the euro dollar move. Okay, so on the safe side, I just want to stay safe. But if this market here can actually rebound back to 122 half level, I want to see if the market can give me another chance to engage this at a higher level. Okay, so by and large, I do see this as a potential three-way to test the 121.50 levels, but by and large, I still want to sell this currency pair. Okay, Aussie dollars has been my winner for this last 2 weeks. I have positioned my Aussie dollar somewhere around at the break of this of this support line here, and I have held all the way. But my original target, target was to take profit at 0.6635, but it did not quite manage to go there. It stabilized at 0.67 thereabout and starting to bounce. So when I look at sterling rebound so fiercely, I thought maybe it's a safe thing to basically take my profit and call it a day. So actually, I have a good run in Aussie dollars. Now I want to see if the market can actually give me another chance to engage it on the short side. Over in dollar versus the yen, the dollar did not come down very significantly against the yen. It's basically just holding water. The market low traded was 135.90 thereabout. So we can see it's very shallow move. The market high of 136.55. So the market only dropped about 60 pips, and my target for this move here is at 139 here. So I think there is enough strength here for the market to actually trade even higher. Whereas the dollar CAC has pulled back quite significantly. Well, I was saying that dollar actually have a retracement is actually more evident in either the sterling versus the dollar, or the other one is the dollar versus Canadian. You see the dollar Canadian pullback in a three-way pattern. Bottom side is 135.15 thereabout, but I think by and large the market will actually be able to trade higher to to test the 137 level. So I think there is still a bit of mileage left for dollar versus Canadian. Okay, while we look at this, we also want to look at the precious metals. Precious metals actually has a is still in consolidation. Not much of a major move here. We can see that for the month of February, the what correct the crude oil basically has been in consolidation. Let's take a look at the daily time frame. In the daily time frame, we can see that this market is in consolidation, very well defined. The bottom is at $70, the top side is at $82 or $83 thereabout. So between this bracket of prices, the trading range has been getting narrower and narrower and narrower. The latest range is between $80 and $74. So between this $80 and $74, there's only $6 price activity between this narrow band of prices. So the money is definitely not in crude oil right now. If you want to trade energy, I think there's a better bet here. You can consider looking at the natural gas market. Okay, natural gas market has been falling since August of last year from $10, dropped all the way to below $2, and this entire move represents 80% decline in prices. The market is seriously oversold, and we saw last week that the market has bottomed out at $1.96, and now we are seeing a bit of a rebound. You go down to the lower time frame, you can see this rebound is just beginning. I think the market has already bottomed, so there is a lot of potential for natural gas if you want to trade this. I have not been able to buy this because I've been waiting for a decent pullback. It did not quite happen yet, but if it does pull back, I want to be able to participate in this potential technical rebound. I wouldn't say the market is going to be turning around, but I think there's very good case for a technical rebound that may last for a couple of weeks. So if I get a good chance, maybe I will do that. Now, what you can do is do a simple retracement from the high to from the bottom to the high here, and take your measurement from there. Usually the market can pull back 50%. That would be a great level to actually anchor in a position. The 50% means the market will have to come back to what price? $2.36. Okay, the market can pull back $2.36 in a three-wave pattern. That will be my cue. Okay, so I'm just patiently waiting for that potential pullback here. If it happens, I want to take it. Okay, so this is something that you can consider, because I think the market has really a lot of potential for this move here. Okay, so this is where I want to go now. Over in precious metals. Precious metals, in terms of gold, we can see that gold have a bit of a minor rebound. The market held out last Friday at $1,807 thereabout. Now, when you compare this to the weekly time frame, you can see that to the daily time frame, you can see that the market actually have a pivot here. Okay, previously in August of last year, we can see that the high here was actually $1,808, I believe. Okay, yeah, there about $1,808 thereabout, and you can see that the market peaks from here, go down. On the way up, it struggled to go beyond that. So that was an area of resistance here. Now, as the market punched through on the way down here, it managed to hold. So obviously, this is going to be a pivot level, because the market has held out last Friday at 108.7 thereabout. So it looks like we may get a bit of a rebound, but this rebound is going to be pretty shallow because there is no real momentum behind yesterday's rebound. And there, for all I know, the market may only rebound to a certain point before it comes back down again. This is a sentiment that's very different from January. January, the market, you can see the gold prices was tearing away, and at one stage was looking to take out $2,000. But as you can see, the market picks out at $1,956 and $59 thereabout, and markets has been coming down very aggressively. But over the long term, I want to be long in gold, but the timing has to be just right. For all I know, the gold market may actually continue to go down for the entire month of March, maybe into April itself. For the next 2 months, I do believe that gold is not going to be able to rally significantly. If it does, I think it's just basically a rebound. So look out for a level. If the market managed to go back to $1,948 thereabout, take your chance and do a very, very tentative short position. Technically, this is what I would do for trading, but for a swing position, I definitely want to buy, and I hope that this market will continue to go much, much lower so that I can position a very long-term position, because over the long term, I am very, very bullish precious metals. Now, on silver, you can see that silver continue to slide. The market hold out at $20.56 overnight, and this is telling us that there is no incentive. There is market bounce is going to be so shallow. So in the meantime, why the market bounce here? We take a look at the daily time frame. This is where the low was previously. Okay, the low previously here was at let me see, at $20.58. So it's just marginally lower. So you can see that if the market can actually hold out somewhere at yesterday's on Friday's low, there's every incentive for the market to actually rebound a little bit, maybe to test the $22 area. So if we get a rebound in the three-wave corrective pattern, that would be ideal, okay, for another leg down in the silver market in tandem with the gold market. Okay, over in cryptocurrency, nothing really much happened on yesterday morning. About this time, we can see that the Bitcoin itself, based on the sun over the weekend rally, the market went up to 25,000, sorry, 23,900 thereabout. Okay, I'll go down to 4 hours to show you the entire move here. This is on Friday. Market actually attempt to go higher, but got pulled back yesterday. This is yesterday's morning high, $23,890. So it does look like the market is going to be consolidating for a while. The top side is 25,270. The bottom side is 21,000, about $380. So between this bracket of prices, the market may actually be consolidating. If the market do come back down, I think the potential is for another leg up. So do watch out for the potential for another move higher, because we are beginning to see a decoupling of the correlation between US equity markets and digital assets since last week. Okay, so this observation may actually suggest that digital assets may actually be trying to get higher. Now, over in Ethereum, we can see that the bounce higher yesterday in the morning itself was actually pretty strong. At the bottom of this move here, you can see there was a reversal pattern at $1,558.40. But this is also cancelled out by yesterday's high at $1,664.20, which also end up as a reversal pattern. So between this bullish pattern and the bearish pattern here, I think the market will have to slug it out. And so in the meantime, just watch out for a break of either one of these. Either the market break higher above $1,664 or break below $1,558. So either way, the market will have to break up to resolve either in one direction. I think that will be dominant. Okay, over in Ripple, do not see a lot of move here. Market has been drifting basically between 0.36 to 0.41. So between, again, this market here has no incentive to go either way. So like I said, this market has no incentive. So the money is definitely not in Ripple for a time being. Okay, the money is definitely in either Bitcoin or Ethereum for now. Even Solana is not also trading very aggressively in either way. The market pulled back quite sharply from $27.15 to a low of $21.40, and the market has been going nowhere. Okay, so again, like I said, the market is not so far not very obvious in Solana. It is not also evident in Cardano. Cardano pulled back very, very sharply, almost 80% from the top of 0.42 to drop to 0.31. So the market rebound is very, very tentative. So again, this is not where the money is. If you want to buy, yes. If the market do come back and test the 0.35 area, maybe you can take your chance. If you see that there's a reversal pattern on the lower time frame, maybe it's worth a while to consider doing a buy here. Okay, but the money, like I say, could be possibly in the major coins here. This is all I have for you. In the meantime, this is Daniel Ang saying goodbye. Until tomorrow. Bye bye.